All right, everybody. Good morning, good afternoon. Let's go ahead and start with the broad market analysis. We are going to be covering, it is a short week this week. So Friday is Good Friday. What we are looking at is tonight when futures open up here Central Time, 5 o'clock, running charts and giving you actionable plans from tonight all the way into the 7th of this week. So let's go ahead and get started. So earnings, as far as earnings this week, just understand that it's pretty light. Things are kind of basically dropping off, and so what we're looking for are more or less like events around econ data, investor conferences, and so forth. So we'll kind of go over that as well. Far as this week coming into this week, what we're looking for is Monday. I don't see anything, honestly, on any of these days that I'm really interested in. So, what I will do is tell you on Monday, okay, what we're looking for is Disney has their annual shareholders event. Around 1 p.m. Eastern. So keep your eyes on that. You guys know I'm long term at Disney, and from our ads, those positions are up about 70%. I like to see those options, reach much higher than that. But again, this will be an event that will move Disney, so please be aware of that. And again, that's Monday, annual shareholders, Monday at 1 p.m. The other event that could be something you want to take a look at is going to be DocuSign, DOCU. They have their Morgan Stanley Silicon Software Bus Tour that's happening on Monday. So again, we'll look at those names tomorrow morning just to see if there's any kind of setup using supply and demand. All right. Tuesday, same thing. I don't see anything on here that I'm really interested in. However, MBLY is presenting on Tuesday. CrowdStrike, CRWD, they have an investor brief after the bell. After the bell. So it'd be really interesting to see where price closes on on Tuesday with CRWD. And we'll give you that chart. I'm going to basically mock up a blueprint for us to trade off of that for this week as well. The next one is going to be Rivian, and that is 1:20 p.m. on Tuesday as well. Coming over here to Wednesday, the biggest thing for me, once again, none of these names really mean too much to me. And the names that do, and what I'm interested in, is going to be FedEx and Walmart. So FedEx has an event going on at 10 a.m. on Wednesday. And then Walmart has a 2-day presentation that they will start. So let's just sum it up with this. I am very interested in the names Disney this week, DocuSign, CrowdStrike, Rivian, FedEx, and Walmart. Far as earnings go, like I said, it's starting to get pretty light. Now, the next thing that I want to show you is going to be the econ data. Okay. So all of these events will cause some sort of disruption in the market, meaning it'll get a little bit volatile, right? And those things, and what I believe are the most important that's coming up, is going to be Monday, ISM at 10 Eastern time. We should see some sort of move from that, a little bit of volatility. Tuesday, job openings. Wednesday, ADP employment. And on Thursday, jobless claims. And then on Friday, let's go ahead and take a look here. This is Friday, employment report, employment rate, so forth, and consumer credit. All right, so we do have quite a bit of things going on this week that are going to create some sort of volatility in the market. But as you guys know, we trade supply and demand, and it makes it a little bit easier to read that without getting too worked up on any kind of news events. Now, this next chart is last week's SPY and QQQ neutral strategy. You guys know, if you don't know, please go to my YouTube page, watch how I trade the neutral strategy when I trade it. And if you have any questions, please reach out to me. So these were the charts that you were given last Sunday. And the idea here is to go long over the green, trim into target one. You could see that worked very well. We pulled back into support, which was at 393.97. We then picked up from there. We hit T1, T2, and T3, and then we continued to move to the upside there towards the close of 409.39. And one thing that I pay attention to is going to be, what did it do after market? Where did it go to? And it was pretty bullish. It headed up to almost 410, and we'll go over these bigger time frames here in a few seconds. Over here on QQQ, this was a little bit different for us. We hit T1. we dropped, we pulled back into and broke below the neutral. This gave you the trigger to go short. We hit T1, T2, almost T3. And then later on in the week, we did break back over the neutral and hit all targets to the upside. And what I noticed here is that we were headed into and very close to the weekly gap that I found on the weekly chart. And that number is going to be on our new blueprint for this week. Okay, so let's go ahead and take a look at that. And this is what it looks like. So once again, if you're new to this strategy, just take note of the levels. The levels to the upside are resistance, levels to the downside of price is going to be support. And we want to take into consideration what the trend is. And this is a really nice, basically stair-stepping trend move to the upside. And that cloud right here is going to be support until it's not. So please understand that. Notice that price, every time it comes down close to the cloud, we are finding support. At some point, it won't be, and we'll start breaking through it and so forth. But again, I'll be here to coach on that all the time. So notice we have this neutral, and on the smaller time frames, we are extended a bit to the upside. When we go back and we just kind of look, when price moves above the cloud, how far do we get above it before we really, bulls get trapped, right? And you want to look at the distance between the cloud and current price, and that gives you your divergence. Right now, we're a little overextended on the smaller time frames, but on the larger time frames, I kind of feel like we're just getting started. So again, we'll get to that here in a second. Please take note of the levels up here. They're pretty slim coming into to this week. I feel like it could be pretty tight and staying between these two levels. But again, I'm a bull by heart. If for some reason we take those out, that's great. But I do expect support to come into these lower levels if we get some sort of pullback. All right, so please, again, annotate these levels, and let's go ahead and move on to our next bigger picture for SPY. This is where I live. This is my favorite. This is what I want to talk about. And this is the bigger picture, guys. And I'm going to go ahead and read to you what I typed here in the room. Typically, I do the quarter chart, but since the market has become very bullish, I want to pump the brakes and dial in on the chart down to spot faster signs of fatigue. I will share both the quarter and the monthly chart. This chart right here, guys, is your quarterly chart, just so you know. The quarter chart candle closed in the bull channel. And basically, see these two circles? This is where I drew my fib, so from here to here. And what I'm doing is annotating the 23 and the 38. And this is what we teach and call the bull channel. If you want to learn more about that, I'll be willing to teach you that and how this really proves to be a very crucial spot since the inception of the market. So once again, we are above the cloud. We are in the bullish channel, and I can't help but to be bullish here as long as price can hold the support at or around that 390 level. Okay, and you can see that that's also confluent with the 38.2. Now, let's go ahead and take a look at the monthly. Now, this is what I mean by, dialing it in and just getting a closer look, because now that the market momentum has shifted and many people are getting bullish, we are kind of running into resistance, if you will, or into some supply here. So I need to be cautious going into this week and really into probably the next 3 weeks or so. It does not mean I'm just going to sit by and not trade, obviously. It just means, and I'll get to that here in a few minutes. On the monthly, same thing. Everything's going to look the same, except what I really want you to take into consideration here, and I think this is just mind-blowing, to be honest with you, because it's been so long since this kind of action has really hit the market. And what I'm talking about is, can you believe that the SPY has been sideways since May of 2022? That's right. And when I say sideways, I'm looking at about right here. And you can see that price has pretty much stayed in this sideways trend. Now, if we look very close, you can see as far as the formations that I teach, We are just now starting to go inside and up, but this is not strong, so I don't want you to get too excited. If you were to draw a line across here and just say, hey, this is going to be your resistance level, then you can see that. All I'm trying to do is touch all the candles here, and I can do that easily, and that's the top of the box. Anytime we get to the top end of the box, I just want you to be cautious. That's all. We have to prove that price can actually break over that and hold above it. And if we're looking at a monthly candle, you want to see a couple weeks be able to hold above that. And considering we're just now getting there, then we're basically starting from scratch. We need to see candles close above there. So that's the biggest thing going into these next coming weeks for bulls. You guys have to close above this level in order for this to be even more exciting and for us to push up towards that 424 and possibly 446 into the next earnings cycle. Okay. But for right now, there's no reason for me not to believe that price could stall here and then head right back down and just kind of stay sideways. Okay. If this, then that. If price can break out of this structure here, then I do believe we can hit 424, but we need to see closes above there on the weekly candles. Let's go ahead and move into QQQ, the bigger picture. And once again, folks, I'm going to give you this first chart. This is going to be your quarterly chart. And I'm going to read you what I had written here in the room. The quarter candle is very impressive and managed to close above the EMA cloud. The top of that cloud is now support until proven otherwise. Basically, all I'm saying is on this quarterly chart, this is your EMA cloud. When prices are above that, they are bullish. That's what I am referencing there. Support is 398 and the quarterly supply is right here. So we need to be somewhat cautious. However, we have tested this level 2 times previous, okay? So in theory, the level should be getting weaker and weaker. And how can we know if that's true? Well, we're going to continue to move above this 320.72 level. And if we can continue to move above there, I would imagine that we try to take out any kind of short stops here, meaning anyone that went short long term could have stops above here, this double top here. And if the market needs to create and build some liquidity, what I'd be looking for is for them to take those stops out, and then we basically just pull right back and then go sideways for a bit. Okay, so on a bullish note, uh, it would be nice to see them take these levels out just above these double tops here. Okay, on a bearish level, or a bearish note, in order for me to even feel like this is not going to continue to the upside, we got this really round and bottom, you're going to have to break 618 or the golden Fibonacci of this quarterly candle that just closed, and that's down there at 284. And I get it, guys, it's really far from here, but that's why I'm telling you I want to drill down and pay attention on the smaller time frames. All right, now the next chart that I'm going to show you is going to be the monthly. Now, this bad boy, it's super bullish, and you guys know what I teach you here. We have a way to basically run off of this formation, and you can see once we cross that threshold, things pushed up, we hit our targets to the upside and so forth. It's been a great start and finish to March, and I love it. We've been coaching this really well. But like, what happens from here? Well, inside and up formation, I got a buy signal. That buy signal actually came in a long time ago, and things are really doing what they're supposed to be doing. My question to myself is whether or not this is extended on a smaller time frame. And like I said, when we start talking about 30 minutes to like the 2 to the 4 hour, it looks like we could stand to have a little bit of consolidation this week. Okay. Now, the weekly, like I said, inside and up, the support here is 313, and then the next target would be 333. Okay. Let's go ahead and move on down to the dollar. My notes for this week, no change. We already know we came up with this blueprint so many months ago. It's working out very well. It's done exactly what we wanted, and it's really helped us stay on the right side of the trading. February has been the hardest month, but I tell you what, January was great. March has been great. February was not, and I really want to keep this going into April. So let's pay attention here. I'm not too concerned about the dollar unless we start to bid above 104. And far as this support level at 101, if we break down below that, I could see the market starting to get into a frenzy of FOMO buying to the upside as we could extend these gains into this year to the upside. But yeah, so I mean, these are your biggest levels, 101 and 104. Everything between is just going to be a little bit choppy or whatever, okay? All right, let's go ahead and move on into the TNX or the Treasury. Again, nothing changes here. I'm not too concerned about the TNX unless we get above 3.99. And as long as we're right here at the cloud, we could see some support there. If we break down support at 3.217, I believe the TNX comes back down into 2.82. But for right now, I would just say a little bit of caution as we're finding a little bit of support here on the TNX. The skew, don't need to talk about this too much, folks, but in this area, we're basically at equilibrium, if you will. You could see like this area, I'd say, hey, be a little cautious. In this area, I'd say, hey, let's go long, hold my beer, and let's have a good time. But right here, we're at a crucial point, and I'll show you a little bit more of that here shortly, and kind of talk about that through that with you. Okay. All right, so fear and greed is at 49. It's basically at neutral. I can't help but to laugh, but if you're a bear, this is kind of scary because, I mean, the market feels really bullish and we're only at neutral. Like, there is a long ways that you could move to the right-hand side and just make this extremely greedy, where people are just like up in arms. And this is where I really want to talk about my overall sentiment. And I'm just going to read this to you, so please listen up because really this is how I feel. I can't help but to remember the masses having a hard time buying as price dropped into demand. As I talk about this, I want to go ahead and draw this for you guys. Demand zones, green. All right. Supply zones, red. What we're doing is identifying where institutions are. The way that I teach is we are waiting to go long into these demand levels, but you need to understand in order for price to get into demand zones, the market, the talking heads, the econ data, the news, and all these other things that the majority of traders pay attention to. Guess what leads you there? It's called fear, and this is why we practice not watching news, not really listening to news at all, and understanding that news pushes price into demand and supply. Let me go ahead and continue what I was saying. Remember, the masses having a hard time buying as price dropped into demand, and now that price is moving up into supply, they are excited. This cycle will never end. It's always the same thing, especially when traders are using lagging indicators and allowing news to sway their judgment. The market will continue to take the liquidity from most retail traders. That includes us, but we are trying our hardest to be on the institution side. Look, supply and demand is not perfect. I'm not perfect, but you have to admit that the methodology works very well. Actually, I believe nothing works better. It's important to take the charts and levels into consideration, and for me, nothing else matters. The charts this week for look a little extended on the smaller time frames. Let's go to the smaller time frame really quick. Let's get over here and we'll go into a 5 just like this. And we are going to put this, let's put it on a 1 hour. There you go. This is kind of what it looks like. Okay. So I just want to kind of reference this so you can kind of understand what I mean by saying that we're a little extended on the shorter time frames. Okay. Now, I'm a huge fan of staying long in supply as long as price is staying above the proximal line. Example would be the NQ, okay, right here on the weekly. All right. And the NQ is in supply, and you can see by that red box, and the proximal line is 13,248. That would be this line. Okay. If price holds above 13,248, I expect 13,500. It's a if this, then that. Just know the bears can trap you in supply at any time. What I mean is, folks, you can listen to my if this then that, and price could be pushing up towards my next target and all of a sudden not get there and break down. So we're always being very cautious of this. Okay. This is a short week, and a gap up on the heels of Friday's action feels imminent, and an open into resistance for regular trading hour for tomorrow. Okay. So just remember what I just said. Again, it feels on the heels of Friday that we could gap up tonight, but be very careful. And I'll be coaching you in the morning to make sure that we still have some room to the upside, or if we're opening up into support, or if we're opening up into resistance. This is going to be key for our regular trading hours for tomorrow. Okay. I don't care if this is right or not, but this is what the charts are showing me. Regardless of tonight's open, we know that we have a great process to trade, and we'll know that tomorrow morning when we open up. This week, my concentration is on the intraday action because the larger time frame has played out as expected, and now I think we step with caution. This doesn't mean I sit on my hands or just watch or, talk about the things that, I could have done or couldn't have done. I still want to take action. I personally like to stay cautious in here and trade in and out a tad bit faster than I typically would. Meaning, pull your stops up on your longs, take your base hits, close out most positions, and concentrate on few until price can prove that it can actually get over the supply zones. Until then, stay flexible and open to both sides. That's all I'm trying to say. So, here on the Nasdaq, folks, what I'm trying to say is this entire zone here, be careful. Doesn't mean we can't trade to the upside. It just means for me that I take base hits, I pull those stops up, and do exactly as I said. But most importantly, I would have to see a close over this zone, a pullback to this zone, and then higher highs off of here to know that what was supply could flip and then become demand. Until then, it is a yellow flag for me. Okay. Now, we'll get into some of the futures and the NASDAQ now. Okay. But before I do that, all right, please understand that everything that I'm showing you, okay, we have ways of trading intraday as well. And I don't necessarily discuss all of that here. I'm here to show you the week by week play, the bigger picture to keep you from getting stressed out. All right. Let's go ahead and move on. So this was your NASDAQ weekly. Just take a snapshot. I'm going to show you really quick. Basically what we have, guys, is support. We are in an uptrend, and if price were to come back to this support, this is where I'd be looking at buying the dip. Inside here, I think I've hit it too many times. Just be cautious in here. Have a good time. Take it to the smaller time frames. What does that mean? Smaller time frame. This is your daily. Look how nicely we moved above the 200 moving average. We pulled back to that. We found support there. We pulled back into the cloud here just several days ago. We found support, showing you how important that EMA cloud is. Notice we are pushing to the upside. We are extended a bit here. Again, smaller time frame, feels a little extended. We could be due for a little bit of a rest. Again, resistance for me this week is 13,406 in that area. It doesn't have to be perfect. And the short trigger is 13,587. Understand I could short off of the resistance as well. Very key note here I need you to pay attention to. Use smaller time frame to use trigger levels. TTM squeeze plus the edges, etc. I've taught you guys this, and if you have any questions, please reach out. We pay attention big time at the levels of your TTM squeeze, okay, on anywhere from a 1 to 5 minute chart. Let's go ahead and move on. This is going to be the, even though it's on a 4 hour, folks, this is going to be a 1 hour chart that I'll be paying attention to 30 minutes. Your support, 13,256 by 13,198. Your demand levels down here at 13,136 by 13,047. Again, these are areas where I would expect relief bounces and or tradable action to the upside off of here. And the trend right now is to the upside. Let's go ahead and go into the ES. and I'm going to take you into a bigger picture, just like this. Now, these zones have been here for weeks. We've been trading this very well. We have now reached the red box. Notice inside the zone, I have created these levels here using 25, 50, and 75% of that zone. Your next target, if this, then that, would be right at the top of this cloud, actually. So around 41.48 by 41.50. Notice that we can stall there. So that's one thing I want to take into consideration. If we break above the cloud, look for the 25% at around 41.67. You get the gist to the upside here. Support for your weekly this week is 41.09 and 40.70. Let's go ahead and go into the daily. You're going to notice here that we have triggers. These are new triggers. Same thing, guys. Use your smaller time frames, 1 to 5 minutes on the TTM Squeeze Pro, plus the edges and everything else I teach you here. Your resistance comes in around that 41.49, like I said, and your short triggers around 41.76. Again, these things have to line up. Notice your TTM down here at the downside looks really good. If we were to get a pullback, looking at long triggers between 41.13 and 40.79, again, using smaller time frames for those triggers to get in. Now over here on the 4 hour, again, I'm using anywhere from 4 hour to 30 minutes to find these zones. You got some immediate support here at 41.24 by 808, and some demand down here at 40.92 by 40.76. And once again, when levels come to the downside into here, we go over to the smaller time frames, look at the TTM squeeze for entry. Folks, this pretty much wraps up my broad market analysis. If you have any questions, please reach out to me. I've been doing this for many, many years. We actually keep all of these charts over and over to kind of see how they work, and they work very well. I'm very confident in the levels that I present to you. Just know that it takes a little bit more than that. All right, just because you have levels, the best levels, and your charts work great does not mean that trading is easy. I never, ever say that. Trading is not easy, but we can make the consistency easier, right? How we approach these levels, how do we trade these, how to think like an institution and keep you on the right side of the trade, and how to avoid FOMO and fear. That's what's really important about trading, and not to forget your allocation. Always trade with the amount that you're willing to lose. I know that sounds crazy, but it really, really has helped me. I hope you guys enjoyed this. If you have, once again, please make sure you give this a like on YouTube. If you have any comments or questions, please ask those in the comment sections as well. I really appreciate your support and can't wait to trade with you this week. Have a great day.